Good morning, everyone. Welcome to Live Trading Thursday. My name is David Verbruggen. I'm happy to be back with you guys again. Like always, interesting stuff in the market. You know, I say that all the time, but it's true. That's whenever things are happening, whenever things are moving, there are some interesting parts in there. Why is this interesting? Because when the market moves, we can take advantage of it, right? And that's just really key and really exciting for what we can do for our families, for our futures, for future generations, for our churches, missions. So it's always exciting. So when I say exciting stuff happening in the market, it is, right? I'm not just saying that. So, all right, guys, you know the drill. Go ahead and throw in all the tickers that you want to look at, any trades, past, present, future that you're considering. We can look at all those. Like I say every time, we've got about 20 minutes or so on here together. So sometimes we don't get to get through all the tickers. So it's usually the first few that are thrown in there are end up being the winners as far as the ones that we can go ahead and look at. All right, guys, keep in mind that all the examples in this live training session should be viewed for educational purposes only and not taken as trading or investment advice. All right, guys, we're going to dive in here. Got to share my screen first, huh? There we go. There it is. S&P 500. Here we go. You see this uptrend, this slight uptrend that we've been in there for a couple months. We broke out to the upside, right? This was Friday, I believe. Monday, Tuesday, Wednesday, Thursday. Yep, this was Friday. We hit resistance last Thursday, and you would have thought maybe we'd pull back down. Nope, it raced up, and we in one day actually went right up to this old resistance of 4,300. Now this is a pretty it's an important line to consider, and I want to zoom out here. So we're going to look at 1 year daily. You can see already how that line, it was resistance back here. That was back in August, right? And I'm going to go ahead and I want to pull this all the way over. So we're really kind of zooming out now, right? So this was August, that was some resistance. Then back here in January of last year, 2022, that was some support. It was support once again in September and October of 21, right? So this 4,300 level is a serious level to contend with. There have been multiple major pivots right at that level. And that's exactly where we are now. In fact, this is day 5 that we've run right up to that level and we haven't been able to break through. Right. And, the question is, will we break through? Well, I don't know. But if we do break through, where are we going? Well, for that again, I shouldn't have zoomed out so quickly. Let's zoom out again a little bit here. There we go. If we break this 4,300 level, where do we think we're going? I think it's going to be about 4,380, right? I got to zoom out more again. Here's why I think that. You look at 4,380, right about there, and you can see that was some support back in there. That was some resistance right here. That was some resistance and support right there as well. So 4,380, somewhere around there, right? It's not always a perfect exact line, but sometimes it is kind of a zone. If we break out to the upside, that would be kind of the next level that we'd be thinking of. That could be some resistance. If we break out, or not break out, but if we fall down, we could be at any number of levels. We could be looking at this uptrending support line again. We could be looking at maybe the 50-day EMA. And, it could break down, find some support, move right back up and retest that 4,300 level, and later on break out to the upside. So many different things could happen here. We also may not break that. Who knows, right? There's still a lot of warning signs in the market. A lot of people think, hey, we might be falling off a cliff soon. This could be the catalyst for that, right? We're just going to have to wait and see on that. So how does that relate to us as traders then, right? What do we do? Because there's a lot. I just threw a lot of things at you guys, and there's a lot of unknowns, right? At the end of the day, the future is unknown. Well, at the moment, we still need to be cautious. I know I've been saying it over and over and over again. We got to be cautious. If you want to take some bullish trades, we can take some bullish trades, but you've got to be cautious on those. Reduce that position size. Be firm on your stop outs. You want to look at some potential bearish trades? We can do that. We are up at resistance here. I would want to see the market move down, but we could look at some trades that could be setting up for bearish, um, potential bearish moves. Whatever it is that we look at, I want to make sure we look at pretty patterns. Okay, so guys, as you throw those tickers in the comment box right there, make sure that we're looking at pretty patterns, right? Because those are going to be the ones that we really prioritize. When I'm looking at a number of different tickers that I want to potentially trade, and if I've got 5 of them or so, and I'm only going to take 2 trades, I'm probably going to go ahead and pick the prettiest of those 2 trades, right? I want because there really is something to say about pretty patterns that are just very consistent. Usually when they're consistent and reliable, then they're really pretty too. So there you go. Thanks, Ed. Appreciate that. We're going to be looking at NET and then Microsoft to get started off here. NET, Cloudflare. Let's take a look at what we got here. Let's see. Okay, so longer term picture here, moving sideways here. You can see that's a nice downtrend. You want to talk about pretty, and that was a nice, pretty downtrend right there. Got a little more volatile as of recently here. Just a few weeks ago was down at 40, then went up as high as over 70, and now down there. So yesterday, obviously, big move down. Question now is that 20-day going to hold? Okay, now here's something I want to say about this one, right? We look at this and we're like, oh, it's a bounce. Yeah, that's a bounce. Oh, it's using the 20-day as support. It is right now. My question would be, is there a history of this stock using the 20-day as support? Right? Has it been doing it recently? Has it been doing it consistently? I see that 20-day bounce, but when's the last time that we actually had a 20-day bounce? I mean, all through here, it just ignored the 20-day. Same here. We got to go back more than, let me pull this up. This is actually bothering me. If you ever need that screen change, you can just grab that little thing right there, and then there we go. That's more where I like it. When's the last time we had a good 20-day bounce, right? I'm not seeing it for a while, right? Even on this downtrend right here, even on this downtrend, it wasn't necessarily bouncing down off the 20-day, right? So all that to say, okay, we have that bounce, but I am not convinced. I got to be honest, Ed, I'm not convinced. Plus, we've got a little upward candle sitting right next to this massive downward move yesterday. I would rather see this thing develop a nice pattern. Now, you might be thinking, okay, well, what about this line here? What if we draw a line? Well, even right there, I thought maybe I could get 3 touches right there with a bounce right at this point. But that's not the case. So even if I draw my line here, which we can do, we absolutely can put a line there. I have to look at, okay, I've got one pivot, and then if this continues up, then I have a second pivot. Now I could throw this one on a watch list and keep an eye on it. And if it moves up and then come back down and bounces off that line a third time, all right, now we have a confirmed trend. At that point, we can go ahead and take a look at taking a trade on that. Right here, though, where it is right now, we're kind of just guessing with where it is, right? So I'm not as big of a fan of the pattern on this one yet. I mean, there are things that I like about it, right? Look, you got a green fundamentals box right there. The valuation is green. It has moved up a lot in the last month, so people are liking it. So there's a lot of things going for it. I think we need to wait and see when does this guy really lock into a sweet pattern. All right, Microsoft, let's take a look at what we got here. Okay, Microsoft, right from the second that it popped up, I'm liking the pattern better, Ed. Just liking that pattern better for sure. Now, okay, same idea, right? It moved down a lot yesterday, and today we got a little bounce off the 20. It seems like recently the pattern that it has done, well, a lot of the last month has just been riding the 5-day. So that's pretty hot. Couple bounces off the 10-day, right? So when you look at that, there's some bounce off the 10-day, 10-day bounce, 10-day bounce. Nice flag right there. But then yesterday we just broke down through the 10-day, right? So bounce up off the 20, but is that going to hold? I'm not convinced yet. I do like the overall pattern better, right? Can we go ahead and throw some lines on here? If we throw that line on there, we're still pretty far removed, right? And that line right there would be kind of mirroring the 50-day, which is pretty straight right now. So we could throw that line on there. That doesn't mean that that's what has to happen. This might move up, but overall still a cleaner pattern to the upside. But again, I would want to wait and just make it prove itself to me, right? I find that the longer you trade, the more picky we end up being, and that's good. That's good. We don't just want to throw our money out there at just anything, right? We want to be kind of picky. All right. Aiden, I see you there. Thanks for being on. Aiden says, could you take a look at ESTE? Looks like a nice rolling pattern. Let's look at ESTE. There we go. Earthstone Energy. Okay. All right. For my rolling patterns, I like to look at a 1-year chart instead of just the 6-month chart. Definitely is moving sideways, right? Definitely is moving sideways. As far as, let me see if I can zoom in a specific way. Here we go. As far as a nice rolling pattern, I like to see just consistent bounces, up and down off of specific lines. While this is moving sideways, where would I put my support, right? Is it going to be here, 1233, or is it going to be here or here? It's not super consistent, right? And same with my resistance. Resistance might be a little easier to, but then there's a difference too, because, well, what about this roll? Like these are big fluctuations, and then the fluctuations get smaller. And actually recently here, this looks more like a downtrend, right? So maybe, okay, I'm going to drop a line right there. This bounced up off of those lows at the same spot there. I'm going to drop my horizontal line there. That I do like. Okay. Now, potentially you could get a line right in here, catch that high, those wicks. That's not super clean though, right? Let's zoom in a little bit. And I want to show something that I'm just seeing here. Oops. Let's grab a quick refresh here. There you go. Let's grab that line again. Let's see this. So I'm seeing that line right there, right? There's a pivot, and potentially another pivot here. And if I take that line and go ahead and clone it, I can get along some of the bottoms here, right? Some of the bottoms there went a little bit below there, but those lines are looking pretty good. So in the very short term, Aiden, I see more of a downtrend. And then my question is, how far is that downtrend going to go? Potentially down to this line right here, right? So not loving the rolling thought necessarily as much. Although this is definitely moving sideways. So I feel like there can be a difference in like the big picture. Are we moving sideways? Yes. However, is it a beautiful rolling pattern? It's not beautiful to me yet. But that doesn't mean there aren't opportunities in this that we couldn't trade. One, if you're aggressive, potentially you could be looking at a put right now. Right? Now you may not like that wick. Oh man, it hit that 5-day and it bounced up. Yeah. You may not like that wick, so you may not take that trade, or you may take that trade and say, you know what? I'm going to put a tight stop out. If it gets a little bit above the last couple candles, so maybe 1358, I'm going to go ahead and stop out. That's fine. You've got the market at resistance too. So if the market falls down, maybe ESTE also falls down, right? So just different things you can think about. All right, want to look at, would you please take a look at Apple? Looks like a possible entry. I'm glad you brought that one up. I saw this one earlier today. I was like, ooh, that looks nice. So Apple was in a really pretty pattern for a while, right? Kind of moving away from my lines. So I haven't pulled them further out yet. But you can see that it still had that 20-day bounce right there. Moved up, kind of above my line there, and then came back down. And today, putting in a really nice bounce off the 10-day exponential moving average. All right, so I still have to kind of think about what I said earlier, right? And what I said was, okay, where's the history of the 10-day bounces? We have a history here of 20-day bounces. So that was really nice, but where is it just consistently bounced it off the 10-day? And I don't see that. However, I do see this pretty pattern that is moving up, and I see a really nice bounce right now off the 10-day. And we know Apple can get really hot, right? The fundamentals are still good on Apple. Apple can absolutely get hot. So taking a trade on Apple wouldn't be wrong. It might be a little more aggressive, but if you understand the risk and you accept that risk, then you're okay taking that trade as long as you're willing to manage that risk, right? So you could look at Apple right now as a potential entry point for a step one trade, step two call. Here's how I would look at this. Because it bounced off the 10 and not the 20, what if we structured a credit spread with a short strike below the 20-day? That way, if it does move down and come to find the 20-day bounce anyway, right, like it has before, if it does decide, oh, I'm going to bounce off the 20-day, then our credit spread is still safe, right? So what if we looked at that? I'm looking at 175 is the highest that I would go, right? So let's take a look and see. And I don't know if we can do a weekend. Let's try this. Let's try this. Let's see what we can find. So June 16th, that's next week, Friday. Not sure if we get paid anything for that short term. But if we do 170 by 172.5, okay, that might work actually. You could make $30 on $220 of risk, right? What is that, 14%, something like that? Pulling out my phone here to just, now I'm really curious. 30 by 220. Okay, 13.6. Yeah, close enough. Rounds up to about 14%. So let's draw that, right? If you guys have seen my my videos, you know I like to draw boxes on the chart. So I initially wasn't too happy with being that close. 175 is really tight there. But for one week essentially of risk that you're putting on, that's not too bad, right? So here you go, 175. What happened? All right, quick refresh again. Here we go. 175, 172.50, right? And I'm going out to June 16th, right about there. This is our credit spread, right? You can see this previous credit spread that I put on, and I don't even remember if it was this thing or another webinar, but essentially what we're saying is we think the stock won't go here, right? It's producing a nice bounce off the 10. You have that 20-day as a protection line. I like it, right? This is probably the favorite one that I've looked at of the several that we've looked at today so far. This one I like best. I'm not saying that this is going to work, right? I'm not saying this is going to be a profitable trade. If you're going to take this trade, you still have to understand the risks. You have to know how to manage the risks and accept it, of course, too. But I think this looks really solid. Right now, what's another idea? Maybe you're thinking, ooh, I want to sell more time. I want to get further away. Maybe even get below this uptrending support line or even below the 50-day. Okay, let's take a look at that. Let's see the 50-day right now. It's right about 170. Let's see if we can structure one maybe a month and a half out with a short strike at 170. What does that look like? Come back to the options chain. Looking at, I'll go July 21. Apple's so liquid, you really could go with these weeklies, July 7th. Let's do that. July 7th. Usually I like to stick with the monthly expirations because the weeklies show less liquidity. But man, Apple just, it's like the most liquid thing out there besides the SPY, I think. So we can go ahead and go with the weeklies here. So July 7th, 29 days out. This is a month. And we're going to look at the 170 by 165. And you look at that. Oh, that's not as good as I thought it'd be. Huh. Okay, $41 potential profit on 459 risk. So that's about 9% or so. Me personally, I'm not interested in a credit spread unless it's going to pay at least 10% max profit, right? Otherwise, it's just not worth it for me. But what if we keep that same idea? Let's sell a little further time, right? What if we do the July 21 like I initially was thinking? Now we're going about a month and a half out, right? I generally won't go further. That's about the furthest that I'll do on a credit spread. Just me personally. There's others that'll do 2 months out. That's fine. Same strikes, just selling a little bit more time. Potential making $58 on 442. So that's a little bit better. It's still on the low side. You're probably looking at about 12% or so of a max ROI, but we could look at that on the chart here. Let's grab that, and if we do 170 right there by 165, and now we're going way out, right? We said July. Oh, I already forgot. I think 21st is right. Yeah, there we go. So these are kind of the two options that we're looking at, right? This is a shorter term idea that had a potential 14% ROI. You've got one protection line in there, but I'd say it's a heck of a protection line because it's been bouncing off the 20-day, right? Or you could do this longer term option right here, a little lower ROI, but maybe a little better probability, right? Right? You'd be in that trade longer, though. You'd be making your money slower, but you still have that 20 days of protection line, this uptrending support line as a protection line, the 50 days of protection line. So you get 2 extra protection lines. So which is the right one? That's the big question, right? Which one is the right one? It depends on you. That's the answer. It depends on you. What fits your risk tolerance better? What fits your lifestyle better? Which one do you simply like more? Which is going to jive with you better? Some shorter term trade that has a higher probability of going south on you, or some longer term trade that has a better probability, but you're going to make that money slower, right? There's that give and take. This is what we do as traders, guys. And so how do you find out what is the right one for you? Paper trading, right? Paper trade this, right? I can't tell you to go get in a real trade right now, right? I just, I can give advice, but I can't tell you to do this. But I'm gonna go out on a limb here, and I'm gonna say go ahead and paper trade this, right? Right? Of course, I can't force you to do this, but guys, this is a really nice looking setup. And if it completely blows up on you, you're gonna learn something through it anyway. So paper trade this. This is cool, right? The setup is really pretty. I'm getting excited now again, right? The setup is really pretty, and we've got a couple different examples that we can choose from. That shorter term, closer in idea, or that longer term, further away idea. And we just even looked at credit spreads. We haven't even gotten into debit spreads or a step 2 call or something like that. So go ahead and do that. Yeah, paper trade, that'd be awesome. Aiden says, man, I wish I'd gotten to steps 3 and 4 so I knew how to do this. Yeah, I love that you said that, Aiden. You'll get there, right? Credit spreads, debit spreads, those are coming. You'll get there. It's all about, what are the tools that you have in your toolbox? If you have more tools, you have more opportunity to do things, right? And so, Aiden, you may not be there quite yet to run a credit spread there, but you'll get there, right? You'll get there. So hopefully in a few weeks or so, maybe you've gotten to that point, you can start paper trading these with us. All right, guys. Well, that's going to wrap it up for today. I want to let you guys know about a free webinar we've got coming up. Let me drop this link in the. I have to find my mouse first before I can drop the link. There it is. All right, there we go. So this webinar is titled, Can You Retire on $500,000? Right? Overall, we're thinking retirement needs to have millions and millions of dollars. But if you have certain skills, like what we've been talking about today, you can retire on less. So we're going to be discussing how one could do that, how one could go about that. That'll be next week, Thursday, June 15th at 7 p.m. Central Time. So again, the link is right there. It's a free webinar. Go ahead and subscribe. I'm actually going to be leading that webinar next week, Thursday. So I'm excited for that and to be sharing with you guys. So that's going to wrap it up for today. We'll see you guys next week. Thanks, everyone.